Welcome to Fintech Frontiers, and thanks for joining us again. My name is Stephen Walsh. I'm CEO and founder of Keeper Solutions. I'm very excited to be joined today by Steve Hoban, CEO of payments company Attenda. Steve, you're very welcome. Great to see you on the show.
Hi, Stephen. Good to see you. Thanks for inviting me. I'm pleased to be here.
It's a pleasure. It's a pleasure. Steve, we've been knocking around, I suppose, on the payments industry together a couple of years now, and I've seen amazing evolution in Attenda over the last couple of years. So I'd be really interested for you to tell me a little bit about what's the big problem that Attenda is solving, and then maybe you can give me some background as to how you identified that and got into it.
So just look a quick sort of background, so you have context of who we are and this sort of scale of our business. You know, we're an SME. We're based in the northwest of England, near Preston. We employ circa 30 people. So, you know, small business in terms of kind of the operating model, but we do have scale in terms of payments. We were founded 30 years ago. So, you know, long heritage in the payments sector, but specifically we support the fuel forecourt sector. That's really where our heritage is, and our reputation has grown over the years. And effectively, we grew from actually a health and safety audit program business. Mm-hmm. And that's what was the first product that we supplied into the sector that 30 years ago. And over time, customers started to asking us for other products and services, and payments was one of them, because the fuel forecourt sector is really fragmented. It's very complex POS solutions, and we've built a reputation over time in terms of being able to service that complexity. And what I mean by the complexity is it's not a one-stop POS solution. You know, if you think of a big retailer like Sainsbury's, it's common POS across all the stores, right? It's standard across the whole company. What we find within the fuel forecourt sector is you've got a mix. You might have a business that owns corporate stores and does have standard POS, but then they might have what we call dealers or franchisees that have their own POS. So you might have different PEDs, different POS solutions. It's quite a spaghetti out there in terms of solutions. And over the sort of 20 years, actually, that we've been providing payment solutions, we've just integrated, we're quite agnostic into all the multiple different POS solutions. So we're very easy to sort of plug in. And then we can provide we've got a single billing platform that we can provide a single billing to customers, because they need to be able to take fuel cards. You know, you think of a coffee shop and they take an Amex, a Visa, and, you know, maybe Diners or something like that. We've got almost 40 different card types that need to be consolidated into a single bill. So we've created that over time, and customers really enjoy that.
That sounds like a pretty complex overnight reconciliation process right there.
Yeah, 100%. And again, you know, if you were setting out to enter as a payments business into the fuels, you probably wouldn't start out where we are today.
Okay.
It's yeah. You know, but that's our USP. That's we're probably one of maybe only 2 or 3 payments businesses that can actually do that, provide a single bill into a complex POS solution. And so we started there. Literally was about how do we provide payment services into a forecourt. And if you think of a forecourt, it's the petrol pump and the shop. So we do retail as well.
Yeah.
And that built nicely. You know, we started from a payments perspective literally about 20 years ago. And now we're managing from a consumer spend perspective about almost £6 billion worth of.
My goodness.
It's about 250 million transactions a year in terms of, you know, numbers of transactions that go through there. And it's really hard to say exactly how many customers we look after because of that complexity. You know, we might be dealing with one customer, but they've got 400 sites underneath them, of which 300 might be individual dealers or franchisees, and 100 might be corporate. We've got about 40% market share of the number of sites in the petrol stations in the UK market now.
That's a massive penetration. Is that around 3,500 forecourts there?
So it's nearer 8,500 forecourts that are in the UK.
Really? Yeah.
But when we started out back in sort of mid 1990s, there were nearer 15,000. So it's halved over that period.
Okay. So there's been a lot of consolidation.
Yeah. And then Stephen, what, in terms of the problem we solve, it started
Yeah.
out being that. It was literally that, the ability to manage complex POS, onboard complex customers that are a mix of, one to many and actually sort of franchise dealers. But about 3-4 years ago, we started thinking about the forecourt in terms of how payments are taken, because it's evolved over time, right? It used to be literally you pulled up at the petrol pump and then you walked into the shop. And then clearly over time, it's like, well, actually you can pay at pump, right? You can tap the device on the pump. And as we started to think as a business around that, it was, well, if you mentally drive onto the forecourt, there's car washes, there's jet washes, there's vending machines, there's coffee shops, there's concessions like Greg's, but we weren't doing the payments for that. So again, our customers would have us providing the one invoice for the pump and the shop, but then other multiple providers, some doing the air, some doing the car wash, some doing the... So we approached our consumer base to talk to them about, would you like a one-stop shop? Would it be beneficial to you to have one acquirer? Because obviously there's this financial benefit on the volume side as well.
Yes, of course.
And the feedback we got was yes, but that type of payment is what we call unattended. It's not a face-to-face payment solution. There's a device on the side of the car wash that you tap your phone against or your card.
So it's quite specialized then.
Yeah. And what they wanted was for us to not just do the acquiring in the background, but to also provide the hardware, which is not what we do.
Right.
So we spent some time researching the industry to look for a partner to do the hardware side of it with us. And we found a really good partner that we went to customers together with. Some of us, we lead the conversation with a partner sort of silent behind us. And others, actually, they lead it and we're silent behind them. And we grew what we called our unattended business, which ironically didn't start in our back book. We through that partnership won into some of their customers. So there's a big Irish vending business actually that we support. They've got about 8,000 vending machines. We do about 4,500 of them at the moment.
And is that an iconic brand or?
Yeah, it is. It's a crisp brand that apparently is the best crisps in Ireland. They are good.
You can only be Tato then.
So we started to grow.
Yes.
Our unattended business, our volume of unattended payments business is actually outside of the forecourt sector. So we're on ferries. We're in retailers' distribution centres, their staff canteens. We're on vending machines in standalone areas, whether it's council areas, swimming pools, airports, things like that. And then we built a reputation around that unattended, that the product worked, the quality of the device is better, and our acquiring price is better. And so then we started to get into like the car wash market. So pretty much every supermarket in the UK we're doing the car wash, jet wash, air, but it's not direct relationship with us. It's with the hardware supplier of the car wash actually.
Yeah.
And then as we built that reputation, we were able to then step back to our own back book and go, we've got 2,000 car washes that are not with you, but you do car washes. We've got a reputation of quality and service and uptime and all those sorts of things. And so now we're starting to transition into that back book. And it's now 25% of our volume that we're doing through that unattended sector, and actually started us to think about what we term mobility payments. So it's like payments on the go.
Yeah.
It's like consumers now, from when we started 20 years ago, when there wasn't even a mobile phone of doing the tap in it, and you couldn't even tap your card, right? You had to put it into a machine, or they had the old...
you might have had a Sony Ericsson phone maybe, or something like that.
Maybe, yeah. And so we think very carefully now about mobility payments and how consumers, because typically we're a B2B, but we're starting to address our mindset to the end consumer that's using it, because that helps us think about solutions that we can provide to our businesses, our business consumers, to then help them grow their basket, grow the volume of transactions that they're doing, improve profitability and spend. And so we've been doing quite a lot of research around mobility payments and what it means to consumers. What's the experience like? And some fascinating facts starting to come out of that.
Yeah. And I'd like to drill into that in a moment, because I know you had a report out on it. But something that's striking me here, Steve, is that that you spotted an opportunity in the market, you analyzed it and researched it, and you identified that yes, there is an opportunity, but it required devices. So you identified a you didn't want to get into the devices, but you identified a partner. And then, yes, you were able to enter into that market, a very vibrant and growing one as well. So I do think that there's a kind of supplier readiness lesson for other fintechs there, whether they're going into whatever market, maybe they're going to a B2B2C or whatever it is,
Yeah.
but that oftentimes a single fintech might not have the full solution, might need to do the research and analysis,
And it was
get the right partnerships.
yeah, it was a very deliberate, as we talked about it as a board, it was like, that's not what we do. It's not our core proposition. We're not hardware providers. And that's
Yeah.
quite a pivot in strategy if we wanted to do that. But we recognized there was a genuine need in the market from customers to have that one-stop shop. And so, yeah, we invested time. We have within the sales team, we assign the partnership, and that's grown beyond just that one. So we now have a channel, go-to-market channel, if you like, is through
Yes.
some core partnerships. But when we look at the partnership, it's also about what are they, we think about us as a business and our core values and how we like to support our customers, and the customer service that we provide is really, really important to us. And we want to make sure that any partners that we work with are aligned to that philosophy, because as far as we're concerned on both sides,
Yes.
when we go to a customer and we're leading the conversation, we're representing them. And so it's critical that they feel confident that we will represent them in a good way. And, often we're in the room together, but ultimately the single neck to strangle, if you like, is Attenda in that example. But equally the other way, we'll let them go into room on our behalf and represent us. And yet that trust in that brand and the quality that you expect is really important in identifying who are you going to work with. And it's not about a short term, we're going to work with these guys for 6 months, a year. It's a long-term partnership that we've got.
Yeah.
And that's helping us, Stephen, with our final bit of our strategy for growth. It starts with the core fuel. We've then gone into this unattended mobility payments. And then actually a couple of our customers have asked us about how could we support them in Europe, because they've got European presence.
Yes.
So we started that last year. We set up a facility that enables us to transact in euros. It's based in Ireland. So we're down, I'm pretty sure it's Cork, where we've set up. And actually we've got 8 customers now transacting in Southern Ireland. And we have now stepped into mainland Europe. Right. Starting in France. So we've got 15 sites live in France now. And that customer actually has taken us and awarded us Italy, Germany, Denmark, Holland, and Romania. And that's giving us a story to tell. Because quite rightly, people in country are like, well, who are you? What do you do? Do you have experience? We're now building a business that can demonstrate that we can safely transact. We can look after them. And again, we've done that with partnerships. Local language is really important. Representation locally is really important. So we've built on that lesson and learning around the partnership channel in the UK market to then step that into Europe.
That's very powerful. And again, taking that approach of finding the type of partnership that you need, but also I think I was hearing that it's not just saying I need this type of partner, but also finding one that aligns culturally, because of the kind of codependence that comes from a partnership and your need to kind of protect your reputation. So that nuance is quite important as well as a factor for success. Or would you say? Or?
Oh, definitely. We when we were looking at those hardware devices, there was a couple that we'll be butting heads. This won't work because there's some principal things in there around the way we support customers that's important to us. And, and equally it's important we listen to what's important to them. But there was a couple that we just won't, we know it won't work. And you can pick that up quite early on in the conversation. And it's a respectful kind of, look, you do what you do, we do what we do. Let's just agree to not go forward. It's really important you get that bit right, because it will come back and bite you in a year, 2 years time.
Yeah, for sure. Well, look, we take the same approach in Keeper Solutions. So we're we're not interested in just kind of short-term engagements, but rather genuine kind of long-term strategic partnerships where you can really grow, generate or co-generate massive amounts of value over long periods of time. That's the way we go about it too. Steve, I'm gonna circle back. I know you kind of brought that research that you've been doing into mobility payments into a report. Fascinating report actually that you released in the last month, is it? Or
Yeah, so it's back in
two?
April, I think it was. March. We
And
sort
and would you be able to tell me for maybe listeners that aren't familiar with this space, what is the core friction, or what were the core issues that were
yeah.
identified in the report?
So we did a survey. It was over 2,000 end consumers that we talked to, and we were talking to them about their experience of mobility payments, and our definition of that was getting on a bus, going to a car park, getting on a train, all the touch points that you have in a journey, if you
Yeah.
like. And what came back was, look, it's clearly there, right? All of us now, when we're traveling, are tapping our phone left, right, and center in terms of purchasing things. But the pain points that were consistent that came back was regional differential. So we looked at sort of, big city, urban,
Yeah.
all the way out to rural. And,
Going from London out to like you've got TFL and they've got that tap.
yeah,
in,
you can
tap
literally,
out.
it's brilliant, isn't it? You can walk up to the tube
Amazing.
now, tap your phone, get on, and then tap it off, right?
Yeah.
So
But you're moving out that region, then that
less
system.
and less, it gets less and less, but also the reliability. So, you're parking in a rural area. Often it's the connection up to the internet is just useless. So you just stood there frustrated trying to make that payment. When you want to use an e-scooter, you don't just turn up and tap your e-scooter. There's like a whole process you need to go through. It can
Yeah.
be offline. Hardware reliability. That's understandable because these devices are outside in all weather, right? But again, turning up to pay for something and you just can't because the machine's offline.
It's
And you
incredibly
don't know as a consumer whether it's like the whirring thing on your computer, it's buffering, or whether
Yeah.
actually it's broken and you can't pay. And then they give you alternatives that you can't access and don't work. And it adds stress to your day of, am I going to get a parking fine? Am I going to get this? Am I going to get that? And the
in the worst
lesson,
case, it might stop you from traveling, from continuing your journey or completing it, right?
yeah. And so that, the survey told us that there was a big proportion of consumers that have had a disrupted journey due to reliability of hardware or they don't know how to define it. They just like, it doesn't work.
Yeah.
So
hardware.
It's really interesting for us because we're part, and it's also payments is a complex relay race. There isn't one person that really owns that end to end. So what we've been trying to do with that insight is work out, because it's a competitive market clearly, but work out where's the common ground where as service providers we can talk and work out how do we improve that end consumer experience. Because when you look at the payment types, number one was card, number two was cash. We were shocked by that. They were going, yeah, we all carry cash because we don't believe that we're going to be able to make the payment. You might be traveling to a meeting. You might be going to meet friends. You could be wanting to do something that you can't not pay for. So cash is still number two in the list of preferred payment methods. And we were like shocked at that.
That surprises me now because I see so little of it, but it is good to have a little bit of cash on you, I think.
I mean, think about your car. I mean, most people now have a little pocket somewhere in the car that has a couple of quid in it, right? Just so that if something goes wrong, they can pay for it. And look, it's never going to be 100% reliable. We're not naive to that fact. But I think the so what, if you like, out of it for us was that consumers want to be able to pay, digitally remotely with mobility payments. They recognize that there's lots of solutions out there, but it isn't reliable and it's not a positive enough experience yet. So how do we as a payments industry work together in the areas where it's not because it's difficult sometimes getting people together because they go, well, we don't want to tell you that because that's kind of what we do. So how do you connect the dots on the relay race in a comfortable
Right.
area that's
Yes.
not anti-competitive and all those good things, but ultimately improves the customer service? Because at the minute you've got people just looking at their part of the relay
Yeah.
race, and they might
Yes.
make an improvement that actually has an unintended consequence to make it worse further up the line. And that's how we're at the start of that journey. And
Yeah.
with tech, the speed now of change that's happening, it is getting better, but also it's a heavily regulated. So you've got this dichotomy of heavily regulated industry,
Yeah.
plus you want to make it faster, simpler, better. And they sometimes butt heads.
Yeah. Yeah. We see that in, a lot of, fintechs that we work with, or financial services companies. They may be regulated, may hold a license, and that there's pressure from the board to deploy AI, for example.
Yeah.
And it's like, yes, but you need a lot of things. You need to protect it. Like, even if you're using an AI, you can't outsource your responsibility to the regulator, or you can't outsource trust with your customers.
Oh.
So if something goes wrong, that you've got some kind of regulatory incident, or some other problem that's arisen because of maybe deploying AI and it doesn't work as you'd want it to, that's your problem.
Oh,
It's not the AI's. That's kind of crystallizing the dichotomy, I think, that you were talking about there. This pressure to lean into technology, but at the same time, in a regulated environment, you have to have an audit trail. You have to have good practice. You have to have it scaffolded, and you have to have explainability and all sorts of things in there, I think.
Exactly. But there's also, so there's that regulatory piece. And then there's like a genuine human journey. It's like, it's because it's so fast. The change is coming so quickly.
Yeah.
And, we are an SME that's been built over 30 years. And sometimes, we do that. We're doing processing. Like, really? You do that? You're still doing it that way? And it's not quite passing checks around, I promise you. But
yeah.
But it's also taking your team along with you, that this is safe, that it is that we have an AI policy, we have training, but also that there's a human impact on this, and often there's like risk of, gosh, you're going to get rid of my job because you're suddenly automating everything.
Yeah.
And so it's how do you cheer your team on, get them comfortable with the change that's coming, but then also reassure them that, maybe there are some things that you're not going to do anymore. But what we view it as is a way of getting the team focused on more value add work and automating those day-to-day tasks that, they're spending hours on at the moment. So, but it's, the number of calls I'm on, the number of sort of roundtable meetings and things I go to where this is such a hot topic at the moment, isn't it? And you can see people, some are running ahead with it. Some are like, oh, I don't want to touch that because I'm a bit frightened of it. And then there's some that are like, I'm not quite sure. I don't know how to start and where to start with this problem. And I think the thing that I, almost 30 odd years in working now in industry, the thing that I feel of the last 5 years is how quickly change is happening, how fast it's coming. You think you're just catching up with it, and then it's different the next day.
Yeah.
And that's a challenge to grapple with.
It is tough, but I wonder whether the working in a regulated environment, I think there are breaks. Like, I think the accelerator might be AI and technology in general, but I think the breaks may be human nature or regulation. People needing time to get their heads around stuff and be able to adapt, or businesses being able to prove to themselves that it is safe to deploy some kind of new technology without destroying trust, or without putting their license at risk.
Definitely.
So, and Steve, I saw, like, you mentioned on LinkedIn there in the last few days that you're evolving from a payments facilitation role to payments orchestrator.
Yeah.
I'd love to understand, like, what's the difference and what's the evolution and what's the impact on your customers?
Yeah. So it's actually ISO. So it's evolving from ISO to orchestrator.
Okay.
Ultimately, we've done it again through partnership. So we've launched a partnership. We now have a what we call an orchestration platform. And ultimately, it means we've got more control of the payments process chain.
Yeah.
And from a consumer perspective, the onboarding experience is better, simpler. We own more of that. It means that we can smart route, so we can make sure that, if there's an outage on a customer and we've got a preferred acquiring partner that we're working, if they're down for a few hours, we can switch them to another one so that they don't lose any sort of income or revenue from their shop or their petrol station.
Are you bringing rules? Are you bringing rules in there then?
Yeah. And we're just starting, Stephen. We haven't switched that bit on yet. So we're almost coming back to that AI conversation. So we've got the platform. We've got the European business is in France is operating through that platform, and so we're learning to how we use it and how our consumers use it and customers use it before we sort of accelerate that to any other larger customer base. And I think, if that customer was on board on the call, they would be speaking positively about it because they're just adding more and more sites to it and adding more and more. That's the one that's taken us to Italy, Germany. So they're pleased.
Excellent.
In terms of how it's working for them. But I think ultimately answering the question, why are we doing it, is to improve the customer experience because we've got more control over it. Speed to revenue, again, because we've got more control over it. And then new products and services that we can surface through there. So we've got our own white label gateway. We can manage the terminals better. So it's just an overall improved experience for the customer.
And does that allow you then, you were saying earlier that, that there's the pumps and there's the shop, but there's also other things going on service sites. Does that give you an opportunity to expand your, the share of business on the sites where you're present? Or is that a separate conversation?
Yeah, it's a separate conversation. I think that, the partner that we've got the platform with, they've got potential customers that we can now go talk to. But equally, again, it comes down to that ultimate how we've chosen the relationship. They're a big platform, so they've already got an existing customer base that we could maybe support. So that's good for us. But also, they want to come into the UK market, so they're mainly predominant in the European market. So we can start to give them access into the UK. So it's a win-win relationship that we're sort of building with them. And I don't think, Stephen, that 100% of our business will go through an orchestration platform in the future.
Yeah,
it's another route and option that we can give to our customers in the end. We've always tried to improve our product and our service year on year.
Yeah,
and this is just an evolution of that journey that we've been on.
It sounds like it certainly is. It's getting you into new markets and then maybe opening a channel to bring new services into your own backyard.
100%. Yeah.
Steve, we've seen the Straits of Hormuz been closed over 60 days now, and that there's been price hikes, there's been fuel protests here in Ireland. I just wonder, how is that affecting your business and your clients' business?
Yeah. So, if we start with our customers and how it's affecting them specifically in the UK, so we've not experienced yet the same that you have in terms of protests, blockading forecourts and things like that. But our customers are telling us that they call it a site going dry, i.e. they've run out of fuel.
Cycling dry.
Yeah. So we are seeing that happen, but it's limited, Stephen, and they get replenished. So it's not like they're dry for days and weeks. They literally might run out of fuel for half a day whilst they're waiting for the replenishment. And some of that's because of end consumers being uncertain what's going to happen with pricing. So they're rushing to the forecourt and filling up. So predicting the replenishment now of the big tank underground is becoming harder for the businesses. And that means that some of them are getting caught out and they're ending up a little bit dry. So that's one thing that we are definitely seeing. The
changes of behavior of the forecourt operators, change of behavior of the consumers.
Yeah.
In unpredictable
ways. And
ways.
ultimately it's that consumer. I mean, and we did see that first week of March when the war started.
Yeah.
Our volume of transactions spiked. They went up a lot. Because
the volume of transactions went up.
Yeah, because if you think about in the media, everyone was talking about, the war's going to affect pricing And, there was a bit of negativity around what's happening with the brands and money they're making. And we saw this before. I think it was 2022. There was a run on the forecourts. I think it was 22. It was autumn time, and there was a driver shortage or strike coming out of COVID. I can't remember which it was, but
Yes.
they couldn't get enough drivers and it wasn't just fuel, but for the tanker drivers, they couldn't get them, and so the public panicked. And we saw our biggest ever daily transactions at that time. We were like, oh, this is amazing. But all it does is mortgage, because the consumer goes and fills up.
Yes.
And then it just means they don't, rather than little and often, they do one spend.
Okay.
So we'd seen that before, and we saw a similar.
So there's echoes of the kind of
because
post-COVID hangover.
Yeah, the media and the press were all talking about, well, the petrol pump price is going to go up to £2, and so everyone just went, well, now it's, whilst it's still down at £1.20, we'll go fill up. So we saw that as an initial thing.
I did that myself.
Yeah, but that was at that time. That was just the war had started, and then to your point, the Strait of Hormuz being closed has put a different pressure on. And that's where, in the last couple of weeks, we're starting to see occasionally a site runs out of fuel, but they're quickly being replenished at the moment. And I think, our customers are saying they've all got all sorts of contingency plans about what they can do, depending on how long it goes on. And then the other thing that we do see in times like this, from our perspective as a business, is obviously what that's doing is adding to the cost of living.
Yeah.
Because fuel's a big spend for consumers. Ironically, when there's a cost of living issue, our volume of transactions goes up, because rather than a customer going and putting £50 in their car, they go and put 20, 10.
Yeah.
Because they're managing
there's
their budget.
A few different behaviors going on. Some lads are going out, they're filling up. Others are going, I'm just going to get a bit now and a bit more later.
It's interesting because that's ironically a little bit better for us, because we're paid per transaction.
Yes.
But then, though, as that continues over time, people start to work from home more. They don't go on those day trips out because they're genuine. We went on a charity walk as a team yesterday, and I was with a colleague, and he's trying to do the Wainwrights in the Lake District, and he was saying,
beautiful.
It's really expensive. He lives, it's half a tank every time he's going.
Yeah.
So he's going, well, I'm not doing them now because it's too expensive now for me to go and do that. And I think that's just one example of probably all of us that you start to think, well, shall I go on that day trip to see somebody, or do I really need to?
Your behavior is adjusting in more chronic kind of ways than the initial acute knee-jerk.
So I think it's going to be, it's so difficult to sort of predict. We've done a little white paper for ourselves as a business of, all the different scenarios and what do we do. But with what's going on, it's so hard to know how they're going to get themselves. It's such a sticky mess.
Yeah. I think they're going to do a deal, though. It looks like they're stumbling into a deal, and maybe things will calm down. Yeah. Hopefully. Yeah.
It's above my pay grade, Stephen.
Mine too. It's all just crystal ball gazing, really.
Yeah.
All right. Well, just to wrap up, then, what's the future for Attenda? What do you see down the line, the next year, the next 5 years?
So, in terms of, we're excited about our future in terms of growth. We see big opportunity in those growth pillars that I've talked about. So we continue to believe unattended payments is a good sector for us, and kind of lifting and shifting. I'm making it sound really easy. I know it's not, but lifting and shifting our proposition into Europe, which we've started, we believe we're going to get growth.
Fantastic.
But I think if we look in the mirror and we're honest, I think our ability to provide simpler, better, faster services for our customers driven by tech is kind of where that needs to go in terms of support, and then also embracing more back office support from a tech perspective to simplify our business. Whether that's through AI or just better process improvement, there'll be a balanced mix of all those wonderful things. And I think that will enable us to grow faster and enable us to continue to improve our customer service to our customers, which is, a thing that we're really proud of. Our net promoter scores are over 90.
Really?
Yeah, so we're really,
My goodness.
it's a secret sauce that's really important to us. And so we need to protect that and
That is
continue to make
phenomenal.
sure that the elements of automation balanced with the human elements of our customer service, that we get that right, and we don't lose
Yeah.
some of that factors going forward. But I'm excited by that. And I think the business is
Yeah.
excited by, we're not frightened by some of this tech that's coming. It's just how we plan it, how we work on it, how we work with the team on it, and embrace it and move forward with it. So I think, hopefully if we do a podcast again in 5 years' time, Stephen, we're talking about some of those tech enablers that we've used to improve the business, that our business split is less sort of 95% UK, is more balanced across the European market.
Well,
And that we've got a grown team. I want to invest in the team. I want more people. In spite of that automation, we'll need people to help us grow.
Absolutely. Well, it's a phenomenal story, Steve, and I really get the sense that we're just part of the way through the journey, but just seeing the impact you're having on the ground in the UK, and now seeing how the volumes of payments that you're handling are large and growing, and then breaking into Europe. It's a phenomenal story, and I wish you every success on the way. And indeed, I hope I can help you with that journey as well over time.
Sure you can.
Super. Well, thanks for coming on the pod, Steve. It's been a pleasure, and we'll wrap it up there.
Thank you. Thanks a lot, Stephen.